Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. US equities cheered a new set of moderating economic data which raised expectations of a pause in the Fed's tightening cycle. Chinese equities powered Asian markets after regulators unveiled additional stimulus for the property sector and boosting demand through measures which included relaxation in FX reserve requirements for lenders, potential tax breaks for child, parental care and education. For the week, the MSCI World, ASX Japan and MSCI China indices rose around 2 to 3%. In the US, the S&P 500 index, Dow Jones Industrial Average and Nasdaq Composite Index rose around 1.4 to 3.3%. Back home, Indian equities snapped 5 consecutive weeks of decline. The Nifty index traded sideways at the start of the week but rose later on strong macroeconomic data and positive global cues. Broader markets outperformed the Nifty index, with the Nifty Small Cap Index up 4.4%, while Nifty Mid Cap Index was up 2.5% for the week. Among sectors, material, realty and telecom were the best performers with gains of over 4.6% for the week, while pharma and FMCG were the only sectors to end the week in red. Indian fixed income market had another good week, with Indian government bond yields falling further this week on improving banking system liquidity, declining US bond yields and lower cutoff yields at the weekly debt auction by the RBI. The 10-year Indian government bond yields fell 3 basis points over the week to close at 7.18%, while the 3-year and 5-year Indian government bond yields fell by 2 basis points and 4 basis points respectively. The INR fell 0.1% against the USD to close at 82.7 per dollar, as rising crude oil prices negated the positive impact of lower US bond yields and weaker US dollar. Brent crude oil rose 4.1% to close $87.9 per barrel, driven by tight supply conditions and use of additional policy stimulus by China boosting demand outlook. Among the other macro updates for the week, the first was on India's first quarter fiscal year 2024 real GDP growth, which rose to 7.8% year-on-year, in line with market expectations and higher than the 6.1% growth recorded in the fourth quarter of fiscal year 2023. This growth was driven primarily by an 8% year-on-year increase in investment spending, while private consumption grew at 6% year-on-year. Normal GDP growth declined to 8% year-on-year in the first quarter from 10.4% recorded in the fourth quarter of fiscal year 2023. On the expenditure side, the biggest contributors to the first quarter growth was from consumption and fixed income investments, while net exports was a drag on the growth, mainly driven by a contraction in exports by 7.7% year-on-year in first quarter. The second data was on India's manufacturing PMI, which rose to a 3-month high of 58.6 in August, higher than both last month's reading of 57.7 in July and market consensus of 57.5. New orders rose the most since January of 2021, while export sales expanded at the fastest pace in 9 months amid robust global demand. Employment continued to rise, but at the slowest pace in the past 4 months. On prices, input costs rose the most in a year, and finally sentiment remained historically elevated despite the degree of optimism slipping to a 3-month low due to inflationary concerns. The third data was on India's fiscal deficit for the period of April to July of fiscal 2024, which rose to INR 6.1 trillion or 33.9% of fiscal year 2024 budgeted estimates. Total receipts stood at INR 7.8 trillion or 28.5% of budgeted estimates, while overall expenditure rose to INR 13.8 trillion or 30.7% of the budgeted estimates. Finally, fourth data was on the core sector output growth, which eased marginally to 8% in July from 8.3% growth recorded last month. According to the data released, output growth remained positive but slowed for sectors like fertilizer, steel, refinery products and cement compared to the previous month, while output of coal, natural gas and electricity accelerated in July. Crude oil production saw positive growth for the first time in 14 months since May of 2022. That's it in this edition of the podcast. Thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.